Welcome back to Road to Fire. We're a family of three documenting our journey to fire, financial independence, retire early. Let's chat about our February 2021 net worth update. I'll provide all our real numbers, current assets and liabilities, and how we're tracking towards our 2021 net worth goal like always, so please hang with me. I'm excited to share this month's update. We did see a small dip in the market in the last week of February, but I don't watch the markets closely, so I'm not for sure what caused it. I do get highlights via the Flipboard app or in my email daily, but because we are long-term investors, we don't track daily or weekly fluctuations in the market. I try not to focus on IPOs, stocks that are on fire, and I just keep on investing via the DCA method because it's been really working well for us. So calculating your net worth is pretty easy. I always share this, but to find your net worth, you take your assets minus your liabilities. Think of your assets of what you own, while your liabilities are what you owe. For example, to understand your home equity, you would take the value of your home, what you own, minus your mortgage, what you owe, to get owner's equity. We track our net worth at the end of every month to reflect back on it later in our overall journey. To keep things real simple, we include all assets that have a value greater than or equal to $5,000. This also does include depreciating assets. Obviously, those assets are not going to get us to fire, but they do have value, so they are included. What we don't include is smaller assets such as laptops, cameras, books, artworks. Not sure if we'll ever have valuable art, but you get the point. Those items do have value, subjective value, and if we sold them today, they'll be added to our cash on hand, but we don't include them in our calculations just to make things real simple for us. So let's review our current numbers. Keep in mind these values are a snapshot in time. I always try to pull these numbers at the end of the month, and the numbers represented are through the 26th, as that is when the market last closed for the month of February. I want to note that we hold a lot of index funds, so I get our updated numbers the following days, as index funds don't trade like ETFs. We've been tracking our net worth for about a year, so I'm excited to see how our progress has changed over time. So our assets are made up of two main sections, our large and fixed assets as well as our liquid assets. This is how we categorize things to keep things simple. I did steal this template from Numbers, made slight adjustments, but I love it overall. Our large and fixed assets include three items. First is car number one, which is our Tesla Model 3, a 2019 version. Second is our second car, which is our 2016 Audi Q3. We had paid this car off last year and hope to sell in the next few weeks. I would use that money to pay down on our Tesla and put the rest within the market. And our last asset is our duplex, which we bought in the last part of 2020 and is our current house hack. These three assets total to just over $420,000. There is next to no change on these assets as we updated the value of the cars and the home last month. For our liquid assets, we include our investments, emergency accounts, cash on hand, and our sinking funds. For cash, we have about $5,500 in our checking accounts and nearly $35,000 in our savings, which is a slight decrease from last month as we had to continue to make some home repairs on our duplex. In total, we have about $41,000 of cash in our accounts, mostly within our savings accounts in Capital One. One thing to note is that most of our money in our checkings accounts are tied to bills that are future payments that are coming out within later in the month. For retirement, we have about $203,000 in our 401ks, IRAs, and our Roths. And we have over $62,000 in our brokerage account outside of our retirement accounts. Here is where you see the most growth. It's up about $12,000 month over month. In total, our liquid assets, also known as our fire assets, are about $305,000 in this month. We don't have any personal items worth adding here, but maybe in the future we'll have some expensive art to put in this section. For total liabilities, we thankfully only have two line items. We have one car loan on our Tesla and the balance is just over $29,000. I shared our February debt-free journey update where we were able to make a $1,600 debt payment last month. We then have a current mortgage on our house hack with a balance of just over $342,000. In total, we owe just under $372,000. Both loans have an interest rate less than 3.6%. So here's our total net worth breakout for February. Our total assets are just over $726,000, including our liquid and our long-term fixed assets. And our total liabilities, including just our last loan and our duplex, is just under $372,000, making our total net worth to be just over $354,000. We are finally making grounds. Our growth comes from our investments month over month and our progress in our debt-free journey. It pays to work on both simultaneously, especially now. Yes to long-term investing. So how does our net worth continue to grow so much month over month? Here's a snapshot of some of our Vanguard retirement accounts and a couple of our joint brokerage accounts. These accounts in the last year had a return of over 31.4%, which is just crazy. But to put things into perspective, the market in the last 30 years averages around 8% adjusted for inflation. So no, it's not just saving or cutting expenses that is helping us grow, but it's the market that's really doing the heavy lifting. But I wish we had put in more money into the market last year. And I think we all feel this way. We still invested using the DCA method, but I was focusing more on building up our emergency fund versus investing. This year, we are doing the opposite. I found that maybe I was being a bit too conservative on some things, and now I'm okay with having a bit less cash on hand. I'm excited to see if this trend continues for the remainder of the year. So here's our net worth trend graph. We started tracking our net worth religiously in May of last year, and I believe our net worth was just around $167,000. Last month, we saw a small gain month over month as the markets were all over the place. So from December to January, we saw an itty bitty growth rate of about 1.3%. But from January to February, our net worth grew 6.9% or an additional $23,000. We had a really strong month overall. Most of our growth came from our investments. I know there is rumors of a crash coming, but this time I'll be ready to buy at the dip. So I know not everyone loves this chart, but this chart is like a friendly reminder for me to keep me motivated. This net worth by age chart is using the Federal Reserve 2019 SCF data. Over 100,000 people were surveyed providing this data, and I provide the link here if you want to get into the details. So we sit here on the chart. I'm 31 and my husband is now 33. We're getting older, and we are still right around the 90th percentile as a unit or collectively. It would be nice to see what the top 1% portfolios look like. But use this chart as a guideline, not as truth, and always focus on the median net worth versus the average as there are always outliers pulling up the curve. So here is our 2021 net worth tracker. This outlines our current progress to hitting our end of year net worth goal of being over $495,000. This is our biggest financial goal for the year. Right now we're tracking 71.6% to our goal. By the end of Q2, we will need to be over $415,000 to stay on track. But we really can't control how the market performs, so we just keep investing and honestly forget the rest. Right now, we're investing over $6,000 of post-tax dollars into the market, and it's definitely showing up in our net worth. Now, our annual goal doesn't seem so impossible now. I was a bit nervous sharing our financial goals a few months ago as we might have looked silly not accomplishing any of them. But now, as we are progressing throughout the year, they do seem attainable. This is an historical time for the market that probably won't last forever, but we will always focus on what we can control. Now, if you made it this far, thank you so much for watching. But don't forget to comment, like, and subscribe below. Until next time.